All right, we got a lot of ground to cover today, so we're gonna go really quick. Let's just jump right in. And the big takeaway is this. Most people are stuck fighting the last war, right? And in our case, that means most people are expecting a market crash like we had in 2008. That's the last war. Maybe they're looking at 2000 or whichever period that you want to look at. But those were different. Those were deflationary crashes. A housing market crash, a credit bubble crash, a stock market crash. But when these markets crashed, we saw stocks drop, right? By more than 50%. Home prices, they collapsed 30 to 50%. Banks failed, unemployment skyrocketed. That's what happened. And as painful as that was, on the other side of all that, we saw huge growth, right? Because the crash was sort of like a reset button. After the crash, if you still had cash, you could get back in, right? You could buy that home, you could buy the stocks much cheaper, and then you could ride the recovery back up. That's why a lot of people today are waiting for that. They're waiting for the same type of crash. So they've been waiting on the sidelines. They've been holding their cash. Some of these people have been holding for 2 or 3 years because mainstream media, other prominent financial channels, online, some other YouTubers, they continue to tell you that this market crash is coming. Look at the debt, they say, right? Look at the inverted yield curve. Look at all the other reasons. But here's the thing, that's not what's coming. And if you're waiting for another 2008 crash, you're gonna get wiped out. December of 2023, I told you there would be a crash, but this time it'd be different. I called it the reverse market crash because instead of deflation, we're facing an inflationary crash. That was almost 2 years ago. And here's the crazy part. The market since then has played out exactly as I said it would. I mean, look at this. Since I made that call in December of 2023, Bitcoin's up 186%. Gold, which so many wrote off as dead money, has surged almost 95%. Even the NASDAQ and the S&P have moved higher, up 52% and 46%. But notice what's lagging. The broader market indexes, like the Russell 2000, right? It's barely up 30%. So if you'd been sitting in cash on the sidelines waiting for another 2008 style crash, or if you'd followed maybe Ray Dalio's all-weather portfolio, which is the classic Wall Street playbook, you'd be way behind right now. Look at the numbers. A simple equal weight allocation in the top 4 assets, Bitcoin, gold, NASDAQ, and the S&P, would have turned a $100,000 portfolio into nearly $194,000 by October of 2025. Meanwhile, Ray Dalio, the all-weather strategy, would have grown to about $118,000. That's a difference of $76,000 in just 2 years. That's a 64% outperformance just by positioning for the reverse market crash that I called back in 2023.